What are some other things that business owners can do to help protect themselves from audits?
Educate your money now.
And then we talked a little bit about this, about obviously keeping better, the best records you can possibly, obviously having people in your corner like lawyers and accountants that are in the industry, obviously in your back pocket. What are some other things that business owners can do to help protect themselves from audits?
Definitely.
Or
so of course,
protect, I guess it could be protect, but or at least be able to be prepared for an audit, I guess, because they're going to probably get audited. So they can't really protect themselves.
Right.
Too much.
And that's the thing, is it's all about preparation. We really try to operate under the assumption that we're going to be audited. And so we just believe that in our minds. For the clients that we're doing their tax and accounting for, we really want to build a perpetual audit trail. So we want to make sure that we have not only the bare minimum documentation that's required by 280E, we really want to have, more than what's required in documentation. If we can have on our books, for instance, we have a line item that reflects, let's say, an expense. We really want to have the actual receipt attached to that expense. Yeah. And then if we have a record of it on a bank account, that's even better, where we have it in multiple places, to where it's irrefutable that, this expense happened, it was recorded properly. And then in addition to that, sometimes what's funny is, and we're going to get into this a little bit, but like banking can be an issue here. With it being federally illegal, some states don't have banking. Most of them have some form of banking right now, but the fees for banking can be really pricey. I've heard of bank accounts for cannabis businesses costing as much as like $5,000 a month plus 3% of all deposits on top of the $5,000. And what's really crazy is that people pay it. They have so much cash that they need to put it somewhere. And so, if you're lucky enough to have a bank account, I would recommend that you try to run as much through it as you can. The problem that we run into, though, is that a lot of these businesses are kind of in a stage where they're coming out of a black or gray market into the legal market, and they're not used to operating with keeping up with receipts, and that's not how they've done things for many years. And so we have to kind of hold their hand through that process and keep them on track with keeping those receipts. But the big thing is that some cannabis businesses only operate in cash. So even if you have a bank account, you can pay them with a card or with a check. They only want cash. And so to some extent, cannabis, in my mind, is kind of always going to be a cash heavy business, just in the nature of it. But having good records on the cash account. So what we see is, most of our clients now they have a bank account, but they also have a cash account. And it's just as important to reconcile that cash account and keep records of where it's going, money in and money out, as it is for their bank account, because that's something that the IRS is going to look at heavily too. And so it's really all about documentation. Like I said, operating under the assumption that you're going to be audited and building a perpetual audit trail. We also, last thing on this is, whenever cultivators sell their product, we sometimes even recommend that they take photos of the batches that they're selling, with an invoice or something next to it, just to go above and beyond what's even required, by state and federal law to really document this.
Yeah, it's almost like when you were talking, it made me think of what we call as, the triple reconciliation, right? So we just want to, we have the picture, we have the document, we have the receipt, we have the bank account, we have all these things, and they're stapled together and put into a folder or on some digital somewhere, so that you're easily accessible to, to be able to say, here's everything that's needed and every identification possible.
Exactly.
So it reminded me of the triple reconciliation.
Well, and no one can challenge you on it at that point. If it comes down to it, and that no one can disallow that expense if we have all those things in place. So you're exactly right. We want to treat it that way. And even for non-cannabis businesses, we use triple reconciliation, but it's just that much more important for this industry.
Right. Definitely. So obviously this industry, as you spoke about, have regulations, and they have the additional tax codes around the deductions. You spoke on the 280E tax code. So for business owners doing businesses in vertically integrated operations, what are some of the things accounting-wise that they should do to help protect themselves? Obviously, we talked about the triple reconciliation. Are there any other things as far as, especially those in multiple verticals?
Yes, and there are, especially those, what we see happen a lot is a vertically integrated operation that either has 2, 3, or maybe even more businesses. To the business owner, it all feels like one business to them.
Right.
It's all their business, but on paper, it's separated out into 2, 3, maybe even 4 businesses. And if that's the case, it is crucial that we want to avoid commingling of funds of any kind. We don't want the cultivation paying for its bills out of the dispensary account. Yes, all that stuff can be reconciled on the books, but it's not a good look under audit. We want to keep that very clean if possible. And that's harder. It's easier said than done, especially if, like I mentioned earlier, some of these banking fees can be so expensive. If a vertically integrated operation, we really would prefer that they have a bank account for each one of their entities, but we don't want them paying $20,000 a month and just to have bank accounts. But that is a reality of this. And so if that's, most banks will discount heavily for vertically integrated operations, but we want to really try to look at these from an accounting perspective as individual businesses. We don't want them commingling funds. If they have to, we want to make sure that if this business needs to loan this business money, then we want to document the loan paperwork, very well. We want promissory notes in place with interest charged. Exactly. We really want to cover our bases that way. So that's one thing. The other thing that we see that can get people in, that people need to be aware of in a vertically integrated setup is, 280E comes down, kind of going back to that for a second, it comes down harder on dispensaries than it does, say, on a cultivation. A cultivation and a processing operation, the federal government views them as manufacturing businesses. The same as if they manufactured clothing, let's say. So an easy way to think about it is any expense that they incur to produce their final product is likely going to be considered a cost of goods sold. Now, a retailer, on the other hand, really the only cost of goods sold they have is what they pay for their inventory plus a little bit of transportation cost. But they have a ton of non-deductible expenses like labor, rent, electricity. They have to just eat that. And so a lot of people do is if they are in a vertically integrated operation, they want to take all of the profit on the cultivation and on the processing side because they have many more deductions. But what we can't do is we can't charge, $50,000 a pound to the dispensary, so it operates at a loss. We really have to keep everything at a fair market value. There's a little wiggle room there, but you can't just go wild with engineering it that way. We have to treat them like they're 3 independent businesses. If you're going to sell product from your processing arm to your retail arm, you need to sell it at the same cost you would to another retailer that you didn't own. And so that's important because the IRS will use that against you if that's what's going on. The other thing is, in the states where you can't separate those out, where you have to just do a single vertically integrated operation, then you can share a bank account if that's the case. But I would still recommend clearly on the books, it's important that each business activity is kind of segregated out because again, the electricity costs, let's say, for the cultivation arm is deductible, but the electricity costs for the retail arm is not. So those transactions need to be clearly defined as to what division they are for to maximize their deductibility. Otherwise, it makes it easy for the IRS to say, well, how do we know that this is not for your retail location? We're disallowing all your electricity expense or labor expense, whatever the case may be. So that's just a few things, but in general, I would say don't go at this alone. Make sure you hire professionals who ideally serve this niche specifically. You want someone, an attorney and an accountant that really eats, breathes, and sleeps, cannabis compliance and taxation. There's a whole industry around serving cannabis businesses now, and it's there for a reason. It's to keep you protected, and in this industry more so than any other one that I'm aware of, to stay in business, you have to be compliant. And so that compliance comes first.
Yeah, and I was thinking, and not to say this would be something somebody would want to do, but I'm not sure if it's even a way to kind of avoid auditing or anything, but if someone were to not, take deductions, would that bypass the?
If they were to not take deductions?
Yeah.
I guess if you took no deductions, then you would be paying, taxes on like your gross receipts rather than your gross profit. Yeah. So, and to be honest, that's kind of what happens with a lot of dispensaries.
Yeah, I would imagine.
I mean, if you didn't take any deductions, then you certainly wouldn't get, hit hard in an audit. But I just don't know that you could afford to stay in business is the problem. So what we see happen is, with the retail locations specifically, and it's a sad story. We'll see a business, let's say they have a ton of cash flow. Let's say they're doing, $10 million a year in revenue. Right. Let's say they have $8 million in expenses. But of those $8 million in expenses, maybe only $2 million are actually going to be considered a cost of goods sold. So they truly netted $2 million, but on their tax return, they're paying taxes on $8 million. It makes it really difficult to be profitable. And so the few deductions that they have, they desperately need. And another thing around that really quick is, another thing you have to be very careful of is we see people, they set up these ancillary entities. Like let's say they set up a management company and they have the management company provide the labor, pay all the rent and utilities, and it's a quote unquote non-cannabis company. And then they take all the deductions over there that they can't take on their cannabis business. The problem with it's a great idea, and I applaud somebody for thinking of that. It sounds good, but unfortunately, what the way that the IRS looks at that is any of these ancillary entities that are doing business, if you own a business that is a cannabis licensed business, and then you own another business that does commerce with your cannabis business, the burden on you is you have to be able to prove that non-cannabis ancillary business is a legitimate company that could survive with or without your cannabis business. So if you have a management company providing all these services, taking out a hefty monthly management fee, and shifting income into this quote unquote non-cannabis company, that's fine if that management company also provides that same service to many other businesses that you have no ownership in. But if that's not the case, it's not going to stand in court. And then the IRS just applies 280E to that as well.
Wow. So
it's something you really have to think about.
Yeah. But that was definitely a good try.
Yes, I agree. Now there are some instances, for instance, there are some times where we can make that work. I have a client that owns a lot of rental real estate, and they do lease it out to many different people, many different tenants. They happen to own their commercial real estate where their facility's at in the same real estate, holding entity, and it pays rent. Their cannabis grow pays rent to that, but it is a legitimate company. It existed long before the cannabis company did. So it's kind of a unique situation. So they're out there, but it's not just as simple as creating another non-cannabis company and then just shifting all the money into that, unfortunately.
Right. So it's doable. It's just, it
has to be done
not
right.
as easy as just, coming up with another business and funneling money to that.
That is correct. Yes. You were asking, what they can do to these vertically integrated businesses to protect themselves. I would make sure that they do look at insurance. Thankfully now, for a long time, insurance is a real problem in this industry. Not many companies would insure a federally illegal business. But now they're out there and they're legitimate. They offer anything from just regular property and casualty insurance to even crop insurance. It doesn't work quite the same way as crop insurance does for like a corn farmer. But if crops are stolen or taken away in a natural disaster, it can cover some of those costs. But being properly insured is another big part of this. And with anytime you're dealing, with a federally illegal substance, you're a high risk, high liability business. So you want to make sure you're protected, from every corner. And again, that's why I say to get with professionals who are familiar with this industry.